Hi guys, this is Crypto Ukrainian from SLED, What's Your Stop Loss podcast. And in this video, I would like to answer some of your questions in regards to cycles. By the end of this video, I will expect everyone to understand what a cycle is and why it is so important in Gann analysis or Elliott wave or whatnot. You can use this material that I'm going to provide you in regards to cycles in any way, to any strategy you want. And you should do so because understanding the basic market cycle will just change your life. So, what is Matrix and what can it do for you? Market matrix is basically a timeline. It's made up of two main parts. The first part is to do with natural cycles, and the second part is to do with the precision of price and time. We're going to do here in this video is to give you an example of what the cycle can do for you. Basically, the cycle can be used on its own or with any existing system, like I said. So for example, if you trade Elliott waves or you do trend lines and technical analysis or even Gann, it doesn't matter. The cycle will help you with the trend. And trend is your friend, and the trend will, help you understand where the market is headed and at what point you should enter a position and at what point you should exit the position, because I will show you within bigger trends, there's smaller trends, and so on. So overall, this knowledge that I'm going to provide you here can pick up the beginning and the end of a trend and also tell you how long the trend is going to last. It does this by using multiple different cycles. Now, cycle is something that repeats. So anything that happens in one cycle will be repeated in the same cycle afterwards. So in this example, the cycle will be your daily life. See, here's Monday, here's Tuesday, and it's midnight. So one day is a complete cycle. The next day is another cycle, an exact repeat of the first cycle, because it's exactly 24 hours in length. Now, for example, in that cycle, there are timed events. One of them may be the time you get out of bed to go to work. And let's say that's 6 o'clock in the morning, and then the same thing will happen following day at 6 o'clock in the morning. Again, you go to bed again. It's a consistent repeating situation. Now, what matters is where the cycle starts. First of all, we need to see the cycle. Here, one day long, and then we need to look at timed events within those cycles. Exactly same thing happens with stock market. There are specific cycles that are naturally occurring, and within that cycle, there are repeating events. Once you see a certain event in the market, you can then predict that's going to be approximately the same place within the next cycle. So, for example, here, you had a market turn down. The following day at 6 in the morning, you'd expect another turn down. Now, let's look at some real charts here. Here's a blank empty chart. It's got some points on it. So simply 1, 2, 3, 4, 5, 6, etc., etc. This is within a cycle. These are turning points within an overall cycle that repeats from the past and into the future. Point 1 at the beginning of the cycle. When this cycle is over, there will be another point 1, but cycle always starts with 1, and it moves from 1 to 2, from 2 to 3, from 4 to 5. You know that from point 1, the trend should be up. Now let's put the actual chart in here. There's the actual chart. This is real data. This really happened. As you can see, we're due for point 1. Then it's moved up. It's trending up now to 2. It's pulled back for a couple of days at 3. Way up again. Then down, then up, then down, then up. This is simply timed event. It predicts into the future. So you see, we got a point here. You can see that towards the end, at number 9 right there, looking at the past events, we're going to be going up. So you're already predefining the trend of the market for the next few days. The point that matters here is that we're going to be buying from here to here, from point 1 to point 10. My camera is in the way, but point 1 is behind my camera. So we are trading with the trend. We don't really want to take short. You don't want to sell because you're going against the bigger trend. So there's more than one cycle in a bigger cycle. There's actually 89 cycles, and I'm going to show you here the first 4. This is what's called the MC1 cycle. We need to look the MC2 cycle if we're going to trade the MC1. In the way that I trade, if you saw my program, Tesseract, point 1 will be the high, point 2 will be the down, right? Here on the picture it's reversed, but that's how you can actually chart it on TradingView. In Tesseract is just mirrored, so it doesn't matter. It's the same thing. So in order for us to see the bigger picture of the trend, we need to look at the bigger time frame. So you start with a bigger time frame, you look at a general direction, and you scale down to find a perfect entry at the beginning of the turning point of one major cycle, if that makes sense. And I will show you what I mean by that. All right, so here I pulled up a bigger trend on top of a smaller trend that I explained to you at first. So now you see at the bottom there, pivot point 1 to 3, 1 to 3 falls in within a bigger move, within a bigger cycle of turning point 8. So we know that 1 is going up, and it should be going up for the next 3 or so days. Then you see you can buy back in when turning point 9 started, is between 4 and 6 on a down pivot. We know this is a part of a bigger trend. So we know it's still going up, but there's going to be a small pullback. So you can buy back in if you didn't start at the beginning. And you can see that on top, cycle 9 is coming to an end. And you see the chart start going down. Then pivot point 11 starts on top, and we can predict and foresee the future and know that it will reverse and start going back up again. Now we're going to take a look at even bigger cycle. So you can see at number 6 there down at the bottom, we're going up. So now we see a bigger picture and it's uptrend. So you basically scale to a bigger and bigger and bigger time frame to see the general picture of the market direction. So we see that at 6 we're going up, then a 7 started. We have a little bit of a pullback. We can buy up. Then we know the 8 starts. So we know the pullback is over. The market starts going up. 9, a small pullback. We can buy. Then 10 starts and we're going up again. Now let's pull up even a bigger cycle. This is Dow Jones, by the way. So now I put up even a bigger cycle for you guys. The previous cycle was called MC2. This cycle is actually called MC3. And as you can see at the bottom of the screen there, you can see bracket number 11. This catches the entirety of a monthly move. So it's a multi-month move up, right? You can see that it's kind of overlapping 6 and an 8. That is because within a bigger cycle, like I said, there's a smaller cycle and the pivot points overlap. So if on a bigger scale, the trend is up, usually the turning points of a frame down will come in early. So by identifying a bigger trend, you can see that you don't want to trade against the grain. You can enter at the very beginning by scaling a larger time frame to a smaller time frame and just wait until the whole cycle is over. So when 12 comes in at the top there, you know that the market is going to be ending here very shortly. And to pinpoint exactly where it goes, you go from a monthly to a weekly to a 4-hour to a hourly and so on. If you just want to have a position trade or have a swing trade for a very long time, which is my preferred method. This is what I love doing. I love entering exactly at the turning point and staying for an entirety of the move while executing little day trades, little scalps within if you want to. This allows you to be a trader that has a position entered for a long run that's going to capture the entirety of a cycle, which is going to make you money. And you can trade the waves in between smaller time frames within a larger picture cycle, which is exactly how professional traders interact with charts. We trade all types of ways: swings, positions, scalps, day trades, whatever it is. We try to maximize our profits, but you technically should have a position open for an entirety of a cycle, because why would you not want to maximize your profits and kind of be safe if some of your scalps don't work out or some of your swings don't? You still know that you're trading the bigger cycle and you know exactly when it's going to end. Now, guys, this is called the MC4. This is even a bigger time frame. I'm using a pension fund here. So here, by scaling up and down, you can see very long moves, like yearly moves. And as you can see at the bottom, cycle 2 falls in between cycle 5 at the bottom there, and it's going up. Then cycle 6 and 8 falls in within a bigger cycle 3, and then by the end of it, it goes down because cycle 4 at the bottom starts and it goes back up. So when cycle 12 within a cycle, bigger cycle 5 ends, you know that the major cycle is over and we're going to be going down. These points on the lower time frames, 11, 9, and 7 at the bottom, are your rebuy points to the cycle. Again, you go lower and lower and lower to identify the actual move, because in each time frame, this wave is going to look different. But you got to see the bigger picture of where it's headed and when the cycle is going to end. We're going to take a look at the method I trade, and this will all make sense. So here on top, I got 2048, I got 512, 128, 32 minute, and 30 second, 8 minute, and 2 minute. They're just hidden right now. But the point I was trying to make in this video is that whatever you're trading, you got to look at one time frame above. And the higher the time frame, the bigger the pullback is going to be at the end of the cycle. But then there's going to be a cycle within another cycle. Like I said, there's 89 cycles in total. So I don't go above 2048. So in 2048, we identify cycles when the cycle is coming to an end. And the cycle should be coming to an end between this 0.9, and we still have a little bit more time, 7 more days until we can still make a higher high. But generally, by identifying the cycles, we know when the cycle is coming to an end and be ready for it. So then, the way we can scale down and actually see a picture within this picture is we go to 512. Okay, what is 512 doing? 512 cycle is not ending for another 2 months. We're pivot point 5, but within this time frame, we're going down right now. So for another day, we should be expecting a down move before switching back to an uptrend, anywhere from 1 day to 15 days. We go even lower. We identified our high point 1. We're starting a cycle on a 128 minute. On a 128 minute, the new cycle has already started. On the newer time frames, it hasn't yet. On the higher time frames, we know that within the next 16 hours, because I already got them mapped out, the software helps you with timing. In the next 18 hours, we should see a down move before a reversal to an up move again. So we just trading pullbacks and bounces all the time by scaling it down and down. It might not make too much sense to you right now, but when you start using the software, or you can just map your cycles yourself, manual and trading view, how I showed you, you can start noticing this. And the more you look at it, the more it makes sense. And you can start predicting and forecast the market moves based on dates, based on weeks, based on months, based on planetary alignments, based on whatever you want. This is just a very basic video for you guys. So not a lot of people even understood what's a cycle within a cycle, what a cycle is in general. I hope this helped you a little bit. I know I was kind of all over the place. If you have questions, please write a comment. I will try to explain it to you guys. Click that follow, click that subscribe. Help us out. We go live all the time. You can learn this technique. This is just the basics of it. I know much more stuff to teach you guys versus circles, different planets, Gann, whatever it is. And you can apply these market cycles. You don't need to trade Gann like I do to apply these market cycles. They help you in any style of trading. Even when you trade levels, you want to know when the cycle starts or when the cycle ends on multiple time frames, and you can simply trade those. So this will help you identify the market trend and the overall direction of price action. See you guys in the next video.